is something most people want to avoid, but what happens when you actually owe tax on your return instead of getting a refund? When do you have to pay it? How do you pay it? And what happens if you can't pay it? I'm going to explain all of that today. My first advice is do not freak out. It's not the end of the world. We need to logically step through, is the return correct, and what happens next. So we're going to look at our return, make sure that we've captured everything. If we haven't, we need to go back to our tax agent and speak to them, or we need to do an amendment. But let's assume that yes, it is correct. This is the actual amount you do owe. What happens next? Well, first step is to work out when is it actually due, because there's no point freaking out about how you're going to pay it or all these different things until you actually know when it's due. So the due date for payment will vary depending on what the due date for lodgement was, which comes down to typically, did you lodge it yourself or did you lodge through a tax agent, and when was it lodged? So if you lodge your return yourself, you likely would have had a due date for lodgement of the 31st of October. So if you owe tax on that return, the due date for payment is one of the following. If the tax return is lodged on or before the lodgement due date, the payment will be due the later of 21 days after the relevant lodgement date, or notice of assessment is deemed received. So in most cases, if you've lodged before the 31st of October, your due date will be the 21st of November, because this is the later date of 21 days after the due date for lodgement. Now, for anyone that doesn't lodge by that due date, whenever you do lodge your return, you'll have 21 days from the date of lodgement of your return, and this is the same if the ATO issues you a default notice of assessment because you haven't lodged at all. Now, for those lodging through a tax agent, you will likely get an extension to the 15th of May to lodge your tax return. So a lot more time to lodge, which means a lot more time to pay. Your payment date, however, will be based on when it was lodged. So we have a few different options here. So if you are lodging up to and including the 12th of February, the payment due date will be the 21st of March. If you're lodging from the 13th of February to the 12th of March, the payment due date is the 21st of April. And for anyone that lodges between the 13th of March up until the due date, then your payment date will be the 5th of June. So you have a lot longer to pay your tax return if you go through an agent. It is one of the big advantages of lodging through an agent. Our next section is all about how do you actually pay it, and it is linked in heavily to the due date section because you'll get what they call a notice of assessment, which will confirm your payment amount, how you can pay it, and on that notice of assessment, it will also confirm your due date. So the notice of assessment is the final document that shows you how much you're owing. While you'll likely get a tax estimate from either your tax agent or when you lodge the return yourself, you want to wait until you get that notice of assessment to confirm the actual payment amount, because the ATO might have made some adjustments between when your return was lodged and when it was finally processed. So always check the notice of assessment for the payment due date and the payment amount. It will also contain the instructions on how you can pay, such as via BPay, or maybe you want to do a bank transfer, or maybe you want to go into a post office. It'll have all those details on there. The biggest issue with the notice of assessment is sometimes people don't receive them. If you go to a tax agent, they will be able to select whether their mail gets sent to you or to the tax agent, so you need to find out what's happened there. Sometimes they go to people's MyGov accounts. Sometimes I've known people just to not get them at all. So if you know that you're going to owe tax, keep an eye out for it. If it gets to 3 or 4 weeks after you've lodged your return and you haven't received your notice of assessment, log into your ATO MyGov online services, have a check there. If you don't have access to that, contact your tax agent and they can check for you, because the last thing you want to do is miss the notice of assessment and therefore miss these vital details about your payment. Now, before I get into what happens if you can't pay your tax return and payment plans, I have now started my own newsletter where I'm giving free tax tips away each week. So if you haven't already, go down to the description of this video, hit the join link. I'd love to see you over there. Now let's get back into the video. So what happens if you can't pay your tax return? Obviously, it can be a stressful moment that you've received this tax debt and you don't have the access to the funds, and you know maybe by the due date you're still not going to have access to the funds. What can you do in this case? Well, the good thing is the ATO are actually quite good if you work with them. Communication is key because they do allow payment plans, but the key is you actually need to contact them and get a payment plan in place and then stick to it. So as an individual, if you owe less than $200,000, you can pretty much organize most of these payment plans through ATO online services, which is great because you don't even have to call anyone. You can go on there, indicate how much you're willing to pay up front and then how often you want to pay and what kind of regular payment you can make. Typically, they like to see them done within a 12-month period, but I do know they sometimes stretch them up to 24 or 36 months, depending on your history and the size of the debt. So go in there, organize your payment plan, but then stick to the payment plan. If you default on the payment plan, it becomes much harder in the future to get more payment plans for your account. Something else to keep in mind is you need to meet any other tax obligations you have while you're under a payment plan. This is especially true for those that have got businesses where they might be getting pay-as-you-go installments, or maybe they're paying GST, etc. You want to make sure you're meeting all of your other tax obligations as well as the payment plan itself. So, for instance, if you're an individual and you owe tax in year 1 and you can't pay it, and you put a payment plan that's going to carry into another year where you're going to owe tax again, you need to make sure that second year's tax is paid by the due date if you're still under the payment plan, or your payment plan will default. Now, one thing to keep in mind is the HO will likely be charging you general interest charges while you are under your payment plan, or if you go over the due date and have no payment plan in place. So these are referred to as GICs, and they're quite hefty. So as of July to September 2023, the GIC annual rate was 10.9%. So if you're paying off other debts additionally and you've got an ATO debt, the chances are that ATO debt is accruing a higher interest rate than potentially some of these other debts. So it is something you need to keep in mind. Now, if you're not paying your debt, the ATO do have other ways they can collect it. The first way that they will always do is collect it from any future refunds you've got. So if you get a future refund, they will definitely take that and use that to pay off the debt, no matter the situation. They can then get debt collectors to go after you. And at a worst case, they can actually issue what they call a garnishee notice, which is where they pretty much put a garnishee on either your bank account or maybe your employer, where they will be forced to pay money directly to the ATO before it comes to you. So this is something you really do not want to happen, and the key to avoiding this is communication with the ATO so that this does not happen to you. Now, if we rewind all the way back to the start of the video, I talked about making sure that your tax return is actually right, but what about if it isn't right? With this upcoming video I've got, I go through what happens if your tax return is actually wrong, how do you fix it, and when do you have to fix it by?